If you're the kind of person who's looking into life insurance for the first time, or maybe you've had an insurance policy for years, but you feel it's just really unaffordable, this is going to be a great video because I'm going to give you 5 pointers on how to save more money on your life insurance, keep more money in your pocket, and give less to the insurance company. So we're going to jump right in and start with tip number one. And tip number one is avoid mortgage insurance through the bank. I've found that compared to a personal term policy, mortgage insurance is about 30% more expensive, and often it's a worse product. A lot of times it's a diminishing face amount, so you pay off $1 of mortgage and your payout becomes $1 left, and now you've not actually boosted the value of your estate, you've just reduced the amount of risk for the bank. And if you get mad at the bank and decide to switch to a new provider, you have to go and apply and get underwritten all over again. So it's kind of a hassle, it's more expensive, and it's an inferior product, so avoid mortgage insurance. Tip number two is go for term insurance over permanent options. So there's three broad types of life insurance in Canada: term insurance, which is temporary; universal life, which is complex and has a lot of moving parts; and whole life or participating life insurance, which has a built-in savings component. So if you're the kind of person who wants to be budget conscious and save more money on your life insurance, choosing a temporary option like a term policy that matches your time horizon, maybe as long as until your mortgage is paid off, until you or your spouse retires, or until the kids are old enough to be out of the house. Those are great term lengths to choose, and when you're done, you can walk away and know that you saved a lot of money along the way. Tip number three, choose an efficient dollar amount. Life insurance gets cheaper when you buy in bulk, and there are some magic price points to watch out for. $250,000 is the first, $500,000 is the second, and $1 million is the third. And a lot of times choosing one of those even numbers will get you a lower cost policy than something that is slightly smaller face amount. For example, I've often seen policies for $225,000 cost more than a policy for $250,000. And so by rounding up to an efficient dollar amount, you can often save a few dollars on your insurance. Tip number four, make sure you shop around. If you are dealing with somebody who's a captive agent for a single insurance carrier, you should make sure that you're dealing with a broker, somebody who has access to multiple carriers in Canada, because there can be up to a 10% swing in price depending on your age, the dollar amount, and the type of insurance you're looking for. So if you've not shopped around, make sure you do so, as it can save you big bucks in the long run. Tip number five, whenever possible, buddy up on your policy. If you and your spouse both need insurance, doing one policy on the two of you combined is significantly cheaper than having two standalone policies on each of you separately. You save on the policy fee, and it typically results in a lower cost policy overall. So if you follow those 5 tips, you can save a bunch of money on your life insurance and put it to better use for your future financial self. For more tips like these, you can follow me on Facebook, on Instagram, or check out our website, www.cascadefinancialgroup.com.